Datavault AI, ticker DVLT, just filed an 8K that makes the $2 billion financing story clearer and riskier. Start with the most important distinction. The full $2 billion structured financing term sheet is still described as non-binding, but the first $25 million payment is binding and non-refundable. The structure is 4 tranches. Each tranche can be up to $500 million. In plain English, this is not one giant check showing up all at once. It is a staged financing plan that still needs several steps to close. The cash test is immediate. The exhibit says Helmex is expected to make the initial $25 million payment by June 4th, using proceeds from the sale of Bitcoin and receivables. DVLT says that money is for administrative, legal, and structuring costs tied to the first tranche. The dilution math matters. DVLT may issue common shares at an implied value between $1.55 and $2 per share. The filing also says the proposed issuance could equal more than 50% of the company's current voting capital stock. Control is part of the risk. The company says the transaction may involve a change of control. The press release also says the counterparty will receive board representation with each tranche, and after the final tranche, it may have enough voting power to elect a majority of the board. Why would DVLT do this? The company says the goal is to expand Sanctum, fund exchanges, service debt, and support a secured borrowing facility backed by preferred units and portfolio collateral. But this has a long closing checklist. DVLT still needs due diligence, final agreements, shareholder approval, possible charter changes, regulatory approvals, CFIUS review, an independent valuation, a fairness opinion, and other financing conditions. Those words matter. A fairness opinion is not just paperwork. It is meant to help the board evaluate whether the transaction is fair from a financial point of view. An independent valuation matters because the preferred units, collateral, and share issuance need support beyond the press release headline. The bull case is simple. If the financing closes cleanly, DVLT gets a much larger capital story, global tokenization exclusivity, and more room to build infrastructure. The bear case is also simple. A non-binding headline can create excitement before the hard parts are done. The fee can be paid, but tranches can still fail. And if shares are issued, existing holders can face major dilution and reduced control. Here's the proof gate. First, confirm the $25 million payment. Second, watch for definitive agreements. Third, watch the shareholder vote and regulatory approvals. Fourth, track actual tranche closings, not just headline size. My opinion is this: the filing is important, but it does not turn $2 billion into guaranteed cash today. It turns DVLT into a high-stakes proof story. Funding proof, dilution proof, control proof,